Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on oil on the daily weekly chart and also USO. So oil started to pull back out in the reaction to the inventory report, and we did a nice job of scouting out a bearish entry on that inventory report. Nice to always be able to have team members on the same side bouncing around ideas in an unbiased way, as nobody had a position at that point, and we were just looking at the run-up leading into the inventory report with 4 big green days in a row, knowing that $54 resistance is an absolute brick wall, as we have rejected from that level time and time again on the weekly time frame, and knowing that if we got a bullish reaction to the inventory report, that we should be looking down at a bearish entry for some consolidation, because after this kind of run up without consolidation, the odds of being able to break $54 resistance would not be high. So that's how it ended up playing out. And again, just having a team that you are working with, trading should not be an individual game, in my opinion, because everybody can win. We can all be on the same side. So having a team that you can bounce ideas off of and have different perspective is more useful than words can describe, in my opinion, when trying to trade stocks. So that was a nice way to bounce things off each other early in the morning on Wednesday. And it ended up playing out really well in terms of the pullback there. And now we're seeing a bit of weakness with upper wicks the past 2 days showing profit taking. But what I'm watching is on the hourly time frame. And I drew this chart up for a member Wednesday afternoon when the price was right here. And that was because it was visually setting up to see a potential head and shoulders bearish reversal pattern. We had our low of 52.68 and our low of 52.69. So a double low and a must hold level for the bulls, because if that level breaks, we go from higher lows to higher highs to then forming lower highs and lower lows. So I drew this bearish reversal head and shoulders pattern when this candlestick started forming, and so far it's playing out pretty perfectly in terms of seeing the psychology and the price action that does associate with that pattern. So we're heading back down towards the support of 52.69 and 52.68, and if that does break, it will confirm that the daily chart is in for further consolidation. The next level that we would be looking down to would be 52.29, this little consolidation low back here, if we do break 52.68. That is the level to be watching, in my opinion, 52.68 heading into Sunday night. In terms of resistance, we've got 53.20, and then the key level is 53.36. Break 53.36 and we negate the potential of this bearish reversal head and shoulders pattern, but as of right now, it is very much in play. Weekly time frame for oil is seeing an upper wick, not exactly the definition of a bearish reversal inverted hammer. The upper wick would need to be longer compared to the real body of the candlestick, but it's long enough to know that there was profit taking, and after a big 3-week bounce, the normal pattern, the common pattern that we see after a dump is an equilibrium pattern where we see our high, our low of the dump, lower high on a bounce attempt, we'll pull back, we'll look to form a higher low, and watch this range continue to tighten. So that's what I'm looking for to happen on the weekly time frame at this point, and breaking that head and shoulders pattern on the hourly would make that more likely. So USO on the daily time frame doing a good job of holding the 100-day moving average support of 1110 at this point. We've held it 4 days in a row, and an inside bar candlestick on Thursday. If we get a break of 1110, the odds of losing that 100-day moving average support are really likely. There's also a potential cup and handle pattern that I'm sure people are going to be posting all over Stocktwits. It's probably the most misdiagnosed pattern that I see out there, but it is the potential psychology of that pattern where we have the high here on the left side of the cup, the dump, the recovery, a lower high on the right side, need to consolidate, form a handle, and then look for a breakout, but it's very early in that handle development, and I certainly would not be making any trading decisions based off that pattern. It's just something that visually stands out to me, and I'll be keeping an eye on. So support, if we break 1110, I'm looking at 1104, and then there's a gap at 1097. And in terms of the weekly time frame, rejecting from the middle Bollinger Band, upper wick showing profit taking, that's more of a bearish reversal inverted hammer due to the size of the wick compared to the real body. The wick needs to be twice the size of the real body to fit the exact definition. So that's close enough for me to be looking for a potential red week on oil, seeing normal healthy consolidation from where we are coming from on oil. Again, don't forget that 4-day big bull move that we saw. We could pull back here on oil all the way down, and as long as we form a higher low compared to 50.77, I would still consider bulls in control of this daily time frame. So we'll be keeping an eye on that double low of 52.68, and we'll check back in shortly. I appreciate you watching. Have a great rest of your weekend.